Welcome to This Explainer. Today, we're going to completely demystify the stock market. Seriously, we're tossing out the complex jargon and the intimidating headache-inducing charts, and instead, we're just going to tell a story. It's a hero's journey, really, from absolute zero to true financial freedom. And by the time we wrap up, you'll see exactly how you can map this exact same journey right onto your own life. So, have you ever wondered how ordinary people actually build extraordinary wealth over time? Okay, let's dive into this because there is a massive myth out there that we absolutely need to bust right from the start. A lot of folks firmly believe that investing in the stock market is some sort of exclusive VIP club, like it's only for the already rich, Wall Street experts, or people sitting on giant piles of inherited cash. But the truth revealed in our source material, it's totally different. Every single successful investor starts at the exact same place, by returning to the absolute basics, with limited capital and just a genuine willingness to learn. Section 1. Starting from zero. The ordinary world. Now, our protagonist's starting point looked, well, pretty much exactly like most of ours. He knew the theory of investing, sure, but in practice, he spent his income just keeping up with bills and treating himself to small luxuries here and there. His money worked incredibly hard for him, paying for his day-to-day life, but he never actually learned how to make his money work for him in the background. It's a huge difference. He had to finally internalize that fundamental truth we all hear but rarely act on. The wealthiest people in the world don't just clock in and work for money. Nope, they shift from working for cash to owning assets that actually generate wealth over time. And it all starts with one of the most powerful assets available to us, the stock. We so often treat stocks as just, flashing red or green numbers on a screen. But we really have to remember that they represent actual, tangible ownership in a real business. Now, what's really interesting about this slide is how it illustrates that simple connection. By just buying shares of strong, solid companies, his tiny portfolio grew right alongside their real-world success. Realizing this was a massive light bulb moment. He got excited. He started learning everything he could, studying financial statements, company earnings, the whole shebang. He quickly learned that successful investing is absolutely not like gambling at a casino. It's the careful process of identifying strong businesses and just holding on to them for the long haul. Section 2. The first $100. Taking the leap. So all this new knowledge finally led to action. But honestly, his very first investment was incredibly small, just $100. Literally, people laughed. They thought, no way is $100 going to make a dent. But he understood the golden rule here. The amount you start with is way less important than the habit of investing consistently. He knew, deep down, that building the muscle of investing was the real secret to completely changing his life. So the crucial point is, he built an unbreakable system. Every single month, he took a slice of his income and invested it. No matter what crazy stuff was happening in the world. Market goes up, he invested. Market crashes down, he invested. Awful news trending on your timeline, he just kept buying. This, my friends, is the absolute beauty of dollar cost averaging. Instead of trying to gaze into some magic crystal ball, he entirely removed the stress of trying to time the market. He just focused on buying slices of quality companies on repeat. Section 3. Learning through mistakes, trials, and tribulations. Now, let's be real. Years passed, and the reality was that while some investments did amazing, others absolutely tanked. He made some very realistic, painful mistakes. We're talking buying stocks based purely on emotion. I mean, we've all been tempted by that late-night hot stock tip on Reddit, right? He followed the hype, and yeah, he even panicked and sold too early during some temporary market dips. But here's the kicker. Every single mistake became a vital lesson. Instead of just throwing in the towel when things got rocky, he leveled up. He refined his focus to look strictly for strong fundamentals. He started zeroing in only on businesses with growing revenue, consistent profits, killer leadership, a clear competitive edge, and honestly, most importantly, products that everyday people actually use. Section 4. The power of compounding. Time is your greatest ally. As the years kept rolling by, something truly incredible started happening. The magic of compound growth really kicked in. His investment gains began generating their own additional gains. Dividends were automatically reinvesting. Basically, his profits were literally giving birth to more profits. What felt like this agonizingly slow crawl in the very beginning suddenly started accelerating. And bam, his portfolio crossed its first massive milestone, $10,000. And let me tell you, that wasn't luck. That was achieved through sheer unyielding discipline. But of course, it didn't stop there. The growth became noticeably larger and faster each and every year. The momentum was just building on itself, compounding day by day, month by month, until the portfolio surged to $50,000. The The snowball was officially rolling down the hill, gathering size and speed at a rate he once thought was literally impossible. And then, the ultimate breakthrough hit, $100,000. And this brilliantly illustrates a critical point. This life-altering growth, it was not a fluke. It wasn't winning the lottery. It was the direct, mathematical result of remaining stubbornly disciplined exactly when other people would have just given up. Think about it. During market crashes, so many investors around him totally panicked. They let the fear take the wheel, and they sold their shares at the absolute worst possible times. But our hero? He stayed remarkably calm. He remembered that truly great companies survive economic storms, and history has consistently shown us that markets do recover over time. So instead of freaking out over market declines, he viewed them as massive market-wide discount sales. It was an opportunity to snatch up quality stocks at a huge bargain. He had discovered the ultimate psychological edge. Time in the market will almost always be timing the market. And that mindset shift is exactly what separated him from the vast majority of people who fail. Section 5. Your journey starts now. Achieving financial freedom. Years later, the results of his patience became totally undeniable. His portfolio was now generating more passive income than he had ever imagined. The money he planted years ago just kept on growing while he slept, while he traveled, while he just hung out with his family. He actually achieved true financial freedom. Not through some sketchy, risky speculation or weird shortcuts, but through basic education and ruthless consistency. Like the quote says, "You do not need to be rich to start investing. You need to start investing to become rich." Let's move to and see how this builds into your own life. The stock market heavily rewards those who think long-term and understand that real wealth is built one single decision at a time. Every great investor began with just one step. So the question we're left with isn't whether investing can change your life. I mean, the story we just walked through proves without a doubt that it absolutely can. The real question is whether you are willing to begin your own journey today. Are you ready to take that first step, to invest that first $100 and finally let time become your greatest ally? Just remember, the best time to start investing was years ago. The second best time is right now. So what's stopping you from making today your now? Thanks so much for joining me for this explainer, and I will catch you on the next one.